Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what we talk about? Well, I want to follow up on my next 100 trade series with an update from the two that are open in the portfolio. And then you might be wondering, hey, where else are you making money and what else are you doing? And I want to show you those things along the lines of using the trend following methodology in IPOs and then intraday trading possibly. That's a bit of an experiment. I'll show you that and some other things. And also, crypto has been heating up lately, and we'll get to all that in just one second. Mind and trade. I want to talk a little bit. This is trading psychology, by the way. I want to talk a little bit about avoiding hindsight bias and seeing what is. And I think both of those kind of dovetail together, and that'll make sense in just one second. Housekeeping. I do take requests. If there's something you want me to cover, shoot me an email. You can go to davelandry.com/contact to reach me. My Twitter is at tfollowingmoron. If you want the slides from this presentation and all the other slides from all the other presentations combined, which have a lot of the rules and setups and all the psychology, of course, and the money management, go to davelandry.com/StockCharts. By the way, I'm still doing a live webinar, usually every Thursday, depends on holiday schedule and my schedule, but it's usually every Thursday at 6 o'clock Central Standard Time. You can go to davelandry.com/webinar. He tried to say to register for that. All right, let's talk about mind the trade. One thing that you really have to work to prevent is a hindsight bias. In hindsight, everything is often very clean, but what you need to realize is a lot of the things that you see in hindsight were there before, kind of a foresight in hindsight. And the secret to trading is really seeing what is. Let's say you're looking at the market and it's pretty darn choppy. You could draw an arrow and it's pretty much gone sideways for quite some time. But let's say you had a fight with your spouse or a fight with your significant other, or maybe you had a fight with both. And if you have both, you probably shouldn't be trading, but who am I to judge? You have enough problems. You could have injury or illness, and as I've said before, it doesn't necessarily have to be your injury or your illness. One time my wife sprained her ankle, and she was kind of grouchy. So that kind of affected my mood and her mood and everybody's mood. Anyway, maybe you've been losing money lately, or maybe you actually been making money lately, and you're flush and you're just free and easy with your money. Or, of course, especially in this day and age, you might be needing money. I was at the grocery store yesterday, or day before actually, and we spent, I think it was $250, and basically we just bought enough to have a small dinner party for a couple of our friends, and it was pretty amazing. And then I was paying attention to the people in front of me, and just the, $100 here, $150 here, and just hardly any groceries. What's the old saying go back in? How's the old saying go back in the inflation days, Jimmy Carter days? Like you spent $300 of groceries and you stuck them in your glove box. Anyway, so all this is in your head and it can cloud your judgment. So you're looking at the market and it's pretty obvious it's going sideways. And then what's going on in your head? It's like, well, you're trying to possibly make something happen. And the point I'm trying to make here is that these extraneous forces can really affect your trading. Now, as I often say, you need to ask yourself, is your present self going to make your future self angry? And the secret there is what is. Looking at the chart, and yes, this chart's going sideways. I think I'm going to avoid it. Nope, this is the mother of all setups. I think I'm going to take it. And I think the main question you can ask to avoid a lot of hindsight bias is, how am I going to feel if this trade ends miserably? Now, let's say you're doing that post-mortem and you think, what the hell was I thinking? Because, of course, everything's going to be clear, even though it might have been already there or was already there in the chart. But that's good. If you back the chart out to day one and just look at it, pretending that you didn't take the losing trade, right? And if you're thinking, what the hell was I thinking? That's great. That's sort of the first step of enlightenment. You realize, hey, you know what? This thing really wasn't in a great trend. It really didn't pull back too much. Make a lot of notes. And then next time, before you go to pull the trigger, ask yourself all these questions. Like, hey, is it trending? Is it persisting? Is it accelerating? And I'll flesh out a few of those things in just one second. Now, better is I'll be back. When you look at a trade and you think, you know what? This was an ideal setup. I know it didn't work, but I'm going to come back to this next time I see the same exact setup. And what I'm trying to say here is if you saw the same exact setup tomorrow, you would take it. Now, there's not enough time in this presentation to get into it, but you also need to obviously do post-mortems on winning trades because sometimes the market will reward bad behavior. I've done complete presentations on that, but make sure no matter what, win, lose, or draw, you're doing your post-mortems. Now, one thing, and I guess I have a bit of an unfair advantage because I do all this stuff publicly. I put it on a trading service every day. I do this show. I do my weekend charts every Thursday again at 6 p.m. Central Standard Time. And I put a lot of stuff out there, and I'm forced to follow up on what I do. And of course, I don't want to look like an idiot, and more important than that, I don't want to lose money. So I went in just to see what I was saying on 9, which has turned into a decent winner for us. And I watched the YouTube on my Trading Simplified show. And when I showed this as a mystery chart right before it triggered, I said, hey, this thing's in a nice, persistent, and accelerating uptrend, followed by a TKO move. It had a tremendous base. I love these TKOs that come after an accelerated move. So you can see I was pretty excited about it before it triggered. And then I went on to say you could trade them in a textbook fashion. That's why I call them a textbook TKO. So going back before I took the trade, you could see that I was pretty excited about it, and I had a lot of justification. And the reason I'm telling you this is not to try to impress you, but for you to do the same exact thing. Now let's get into the methodology in action. And I'm going to save the mystery charts for this week. The one that I had for last week probably didn't trigger. I'm going to take it off today. So next week in this show, you'll see me as a no capital was put in harm's way, and I'll reveal that next week. Anyway, here's the 9 trade. Entry was here, stop was there, initial profit target up here, and the trailing stop. And so far, so good. Today, notwithstanding, it did get whacked pretty hard today. It seems like right before I do a presentation, everything gets whacked. Well, that's it. It happens, I guess. Spelled with a silent SH. And here's the ROIV trade. This is the only other one in the next 100 trade series. It did technically stop out, and I talked about that in previous shows. But I'm still with this particular trade. So last week, we were at negative 2293 for this experiment, or these next 100 trades, I should say. And then this week, we're at 1753, and that number looked a lot better earlier this morning. But still, it was a $540 improvement. Now, is it all that you're trading? Well, there were some trades that were done before this series that carried over and stopped out, as we talked about before. And one of them, I think, was 400 or 500%. So that does make a big difference in the portfolio. But yes, I am doing some other things. The IPO market has warmed up a little bit. I'm not going to say it's gotten hot or heated up because I've only taken one trade there recently. But I did take a recent trade, and that's a buy at B in IPO. So let me walk you through that setup. So buy at B, you're looking to buy on a 5-day closing high. And there's a few caveats, and this is an IPO pattern. And ideally, you want to see this set up within the first couple of weeks of trading. But it can trigger down the road. So here's day one. And on day one, if day one sets the high for the week, and obviously we don't know that at this particular time, then it also has to close above that high. And I'm going to walk you through that in a lot more detail. So there's day 2, day 3, day 4. Now, because it doesn't take out that high, the market must close above the day 1 high. So that would be the entry above that day 1 high. So you want to buy market on close at a 5-day closing high unless day 1 sets the high for the week. And I'll walk you through that in just 1 second in more detail. Now, if day 1 doesn't set the high for the week, then your buy is at any close above the day 1 high. It should say above day 1 high here, okay? So a normal buy would be right there. That would be a 5-day closing high, kind of a stealth pattern. And that's what makes this pattern kind of cool, is it's a little stealthy. The whole world doesn't necessarily see it. And then when it begins to take off, you're already positioned. And that's really, really cool. I know I'm a nerd, but man, when this thing works, it can really work. So here was the actual buy based on the day one rule. For this particular trade, I put on 400 shares, and this was in a smaller account. Now, I did intend to take this trade in larger accounts, and that's where I messed up and I forgot to take the trade. And the next day I came in, and the market had came back in sharply, as you can see, and I thought it'd be kind of stupid to chase a stock lower. And then later on, it did begin to take off. So you can see there's the actual trades there. Just 400 shares, but better than a poke in the eye. And picked up a couple of points here, and then the stop is trailed higher on the remainder. And as I talked about in last week's Dave Landry's Week of Charts, free rolling, being able to put a position on and take some shares off for that initial profit target and then trail that stop higher is the secret to longer term success in trading. If you can establish as many free, so to speak, positions as possible, you'll own the world. Now, let me just flesh out the day one rule because a lot of people get confused on that. So, day one, let's assume this IPO opens, and this is what it looks like on day one. And so far, that's the high for the week, obviously. So then there's day two. So obviously, it makes a new high for the week, okay, for the first week of trading. So the high is no longer used for the setup. Now, you can see it implodes on the following day. That's day three. This would be day four. Now on day five, it closes down here. So any close above the highest close for the week, remember, because day one did not set the high for the week, we're not going to worry about the highs. It just has to close at a new closing high. So any close above this line, you would actually buy market on close. So let's take a look at what happens. Kind of plods along a little bit. Notice it did penetrate that high, but that is not a buy signal. It is not a buy signal until it closes above that first week high. So your buy would actually be right there. And I mentioned this as a re-entry trade in my Facebook group. And notice you can see here that that's the high for the week. Again, it didn't have to close above that high. It only had to close above the 5-day closing high. Now, again, if day one was way up here, it would also have to close above day one. Pretty simple stuff. It's kind of easy to get tripped up, though, if you're not used to it. So here's the post I put out on Facebook on the 13th of December. ATAT making a potential retrigger on buy at B, and then I still have some shares for the first one. I don't know. I'll have to go and look at the post. I don't know if I put the post out initially on Facebook, but if I do put out future IPOs in my Facebook group, then I'll use those as part of the next 100 trades. Okay, the other thing I've been up to is crypto's really been heating up. In fact, I spent a lot of my holiday weekend in here in my office trading crypto. Now, here's a post I put out a while back, and the free rolling concept, establishing those free positions, is what I've been really doing in the crypto, just like any other market, IPOs or anything else that I trade, and even with the intraday stuff, which I'll talk about in just one second. But anyway, here's one that I took, and I began talking about the crypto, and you can see it hit the IPT, and then from that point forward, I trailed the stop higher. And you can see that I'm just using a lot of the same stuff that I use in equities. I also use in crypto, in all of the concepts, I should say. Now, when crypto gets really hot, sometimes you could just play the relative strength sorts, just sort out the strongest pairs and then work to be in those strongest pairs. Still use your initial profit targets and also trail your stop higher to establish those free rolling positions, so to speak. And again, I'd recommend you going and watch that week of charts that I did last week to learn a little bit more about the free rolling. Now, the other thing I've been doing is I've been experimenting with more intraday trend trading. Now, I've never been a day trader, and I've actually preached against it because psychologically it can be really, really tough on you. But I will take certain setups like opening gap reversals, and in more recent times, I've been experimenting with intraday trend trading. If you can catch a trend intraday and use some of the same concepts of taking partial profits and trailing stop higher, you could do quite nicely. The only caveat is you really need trend days for that to happen. And again, not the last week at Bandcamp you, but this is one of the slides I went through last week in the week of charts. And the point I was trying to make is that when the market has a really nice intraday trend, I tend to do okay with this ongoing experiment. And on this day here, I'm not sure what happened, but somehow I pulled it out the hat. I don't know how, but usually that would be a negative day. And the following day was choppy, and I was down a couple of $100 on that day. So that's just one more thing that I'm doing, and it's looking to capture these intraday trends. And I'll use different vehicles for this, ETFs, and occasionally some individual stocks, such as the crypto stocks that have been heating up as of late. The crypto sisters, Myra and Riot, would be some of the stocks that I use for this type of trading. And usually I'm just trading breakouts and things like that when I'm doing those types of trades. Now, I don't want to make it look like you should rush out there and day trade and chase your tail and trade crypto and trade IPOs and all these other markets. But the point I'm trying to make is I do trade a variety of things. I don't stray too far, though, from the core methodology. And the core methodology remains the bread and butter. Catching that occasional big home run, that 300, 400, 500% or more gain, and riding it for a long, long time, maybe even a couple of years. That's where the real money is. But in the meantime, I'm here anyway. So if there are some opportunities for me to pick up some money, then I'll go ahead and give it a shot. Now, getting back to the intraday trading real quick, the secret is not making money, because on a great trend day, like let's say like this day here, it's pretty easy. The hard part, or the reason it's so difficult, is on every day that's not a trend day. It's surviving and getting chewed up in between, and that's what really, really kills you. And as I said in the week of charts, I have a client that's a really good scalper, and he makes a lot of money. And it's not for me. I tried it, and it's impossible to do. I'm just not wired that way. But anyway, he's really, really good at it. Unfortunately, though, he tends to kind of blow up in between, and he loses a lot of money in between. So he prints money, then he loses money, and then he realizes that the volatility of the market had dropped off, or conditions have changed or whatever. So he sits on his hands for a while, and then he comes back in, and kind of a rinse and repeat. And ideally, with this intraday stuff, or anything I'm doing for that matter, I want to reach a point where I have a fixed methodology, and I'm following it to where it's repeatable, as opposed to kind of shooting from the hip with this type of stuff. So I'm using the same concepts that I would use on the daily charts, but I'm using them on an intraday basis. And by the way, for what it's worth, I'm using 30-minute charts. I started with a 5-minute chart, and I kept working my way up. And as I said ad nauseum, there was one week where I found myself hardly making any E-mini trades at all. Not that I'm a fantastic E-mini trader, but I will occasionally trade the futures. And I got to thinking, it's like, what's wrong with the markets? How come I'm not getting any signals? And about the third day, I got a signal, and I took it, and it made money. And I may or may not have had another trade that week, but it was very few trades, and I think they both worked. And it's like, oh, hang on. Looks like I'm doing a little bit better in this E-mini trading, and I was trying to figure out what happened. And come to find out, all that happened was I accidentally changed my charts from a 5-minute chart to a 15-minute chart. And so since then, I've actually taken it one step further, and I use 30-minute charts. Now, someone confused that with not trading during the first 30 minutes of the day, and that's not what I'm doing. I'm just using a 30-minute chart just in case the market chops back and forth, to stay out of that chop, to kind of see the forest for the trees. But if the market does really take off on the open, sometimes I might be in fairly early and not wait that full 30 minutes. And I'll flesh some of these concepts out over time. And if you can't sleep at night, or you have the time, go in and watch last week's Dave Landry's The Week of Charts. You can find that on my YouTube channel. If you go to YouTube, I am at Dave Landry. So check that out. Now, just real quick, I wanted to do an update on the TFM 10% system. So this is what I call the buy line. In ACP, it's called Landry percent of close. It's set at 90 and 50. That means we're looking 50 weeks back, and we're looking at the closing high, and we want to plot this line at 90% of that line. You can call this the 10% line if you prefer. And my thinking is, if a market is going to drop 50%, in this case it dropped 30-something%, right, from the highs, it's going to have to drop 10% first. So if it drops 10%, you might want to think about getting out of the way. So a sell signal is a close below the 10% line or the buy line, and that close also has to be below the 50-week moving average. Now, to get long, you need 2 bars of Landry light, meaning 2 lows greater than the 50-week moving average, and it must close above the buy line. Now, the reason I'm showing you this again this week is because we've been in this bear market for so long, this buy line is beginning to drop. If you go in and look at the pandemic, we had a spike down and a spike up. It was really, you could consider it a whipsaw, although it was pretty nice being out of the market and not having to worry about it. I had some friends and family members that had some really stressful nights and sleepless nights because they were losing tons and tons of money. It's nice to get out of the way. And as I often say, quoting Greg Morris, whipsaws are frustrating, bear markets are devastating. You could survive frustration. So the point I'm trying to make is this system doesn't adjust quickly on a sharp rebound or a sharp V-type recovery. But if you get into a prolonged bear market, it will slowly catch up to price. And that's what it's beginning to do now. So we could see a buy signal here over the next several weeks. Well, that's it for today. I want to thank everybody for watching. Again, if you want to follow information, go to davelandry.com/StockCharts. Join me weekly in the Week in Charts, davelandry.com/webinar. And if you need to reach me, davelandry.com/contact. Again, thanks for watching, and may the trend be with you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.